So we saw the second quarter numbers from the banking sector and for companies listed on the Nigerian Stock Exchange, and this looks really at least good enough. And it looks like this supports the second quarter GDP national data that we had. So it looks like all the data in line as we're seeing them from the banking sector. And again, but of course, let's talk about the financial services. Broad Street too, in particular, how do this GDP relate from the main street to the market street? Omotola, Abimbola, investment analyst from Afrinvest Securities. Good morning.
Good morning, Boason.
Thank you very much for coming up with those very nice set of data that you folks analyze in terms of financial services sector growth rate into the GDP.
Correct.
But again, reading the numbers and you look at the contributions of the financial services sector, you try to break it down here over a 10-year average growth that we have in the sector. And I can see where we double down and then we saw aggression. Explain this to us.
Correct. Looking at the growth of the financial services industry, you could say that it has performed decently over the last 10 years. Coming from the consolidation of the banking industry in 2005, we have seen the number of banks in the country, reducing significantly to 25 from around 90 banks that we had before. But then the banks that he merged out of that consolidation, they have much more bigger balance sheets, they leverage on efficiency to increase their branch network and grow their operation and deepen their access to finance, by the average Nigerian. So that has reflected in the growth of the industry over the last 10 years, I would say. So the industry has grown by 3.5%. And for the second quarter GDP report that came out earlier this week, you will see that financial services industry was one of the positive growth drivers of GDP. Sector expanded by 10% year-on-year in second quarter of the year, compared to a growth of less than 1% in the first quarter. It was driven by both the insurance industry and then the finance industry as well. So creditably, the industry has done fairly well, looking at just the headline numbers in terms of the growth of the industry, as well as the size of the industry as well. 2005, financial services industry was valued at less than ₦1 trillion. But today it is valued at 3.5 trillion naira in nominal terms. So that goes to show the level of financial sector development that we have in the country. However, if you want to dovetail into looking at the access to financial services by Nigerians, you will say that we've barely scratched the surface, and there's still a long way to go in terms of deepening access to financial services, including payments, credit, savings, pension, and insurance, by operators in the sector.
Give us a minute.
Okay.
Let's look at the second quarter GDP. If you're going to grow the economy, you need the banking financial services. Whether you consume stocks and bonds, shares, and is a different thing. Whether you buy insurance is not, but the banks have to be there to make sure that something happened.
Correct.
So we can't take this GDP positive reading for Q2 out of the banking sector. But again, if you look at the news, the kind of Achilles heels of the banking sector, which were the non-performing loans into the energy sector, what we call the power sector, into the oil and gas, downstream and upstream, with some of these problems beginning to emerge. You think this has been a very decent performance for this sector, for this GDP reading?
Correct, particularly in the second quarter of the year, because we had the movements, rather a policy shift from the central bank into a flexible FX framework in April. So we have seen the volume of foreign investments into the economy grow quite significantly, and you will see that the activities of investment banks, right, in the economy in the second quarter of the year, improved substantially because the volume and value of transaction in the capital market surged as a result of that policy shift by the Central Bank of Nigeria. However, going forward, we still believe that the Central Bank needs to sustain the current policy framework, by allowing rates to be independently determined by market forces, so as to ensure that we have enough portfolio and direct investments in the economy. Which banks, are in the, serve as the platform, by which this capital are going to flow into the economy. So you can't truly dissociate performance of banks from the economy. They are the gateway in the real sense of it.
When you folks who are in the asset management side of the market begin to see inflows of foreign portfolio inflows, and some of these are still stories coming out of the second quarter from MBA, from the Central Bank of Nigeria in terms of capital importation and all of that, and reading all of that. And you begin to see investors' interest, even the local ones in the market. That looks like a signal to you, does it, that the GDP is beginning to turn a corner?
It is, in fact, because non-oil sector of the economy, which includes agriculture and the services sector, they are significantly, and as well as manufacturing, their performance is tied to the availability and liquidity of foreign exchange in the economy. So in 2016, when we had FX shortages, you saw that performance of the manufacturing sector was negative. We had a 4-quarter-long recession in the manufacturing industry. Same thing with services industry, which fell into a growth contraction in third quarter 2016. But with the rebound in FX liquidity, particularly in the second quarter of the year, we are beginning to see growth in manufacturing sector once again. And like you said, it should signal a rebound in the growth percent of the economy. However, I believe that a key lesson we learned from the recent crisis that we've had in Nigeria is that we truly need to deepen the domestic investor base in the economy, so that there won't be so much volatility in the capital market and in the economy when foreign investors are leaving the country, and that goes to show that we also need to have a high level of financial deepening in the economy. We need more people to be banked. We need more people to be investors in the capital market, so that we are not so reliant on foreign capital.
Let's go to this. We talk about financial access, and we're trying to do a bit of it. And you did a bit of a current. You folks did at Afrinvest did a bit of a financial access in Nigeria using FINA as a basis. So let's put that chart. Let's put that table up there, and you look at this chart in terms of where we are when we look at some select countries within the continent. South Africa is still obviously the leader, and we're just coming around the corner at number 3.
Correct.
Despite our demography and everything else.
You're right. Looking at the population of the banks and the unbanked in Nigeria, you will see that we have a very low level of financial access in the country. The number of people that are excluded from banking institutions in Nigeria, they are up to 41.6% of the population, which is the highest in Africa and one of the highest in the world as well. And the reasons for these are not so far-fetched. The number one reason seems to be low income level of the average Nigerian. We have a very high level of poverty prevalence, up to 50 to 70%, depending on who you talk to. And for people who have low income, the priority for them isn't saving or accessing credit. It is just survival. So they don't demand for so much of financial services. And that is the reason why you will see that the number of bank branches in rural areas are quite low, because it makes no economic sense to establish bank branches there. So I guess for us, what we think should be done is that rather than waiting for the economy to get better and to reduce poverty level, we probably need to have alternative ways of reaching this low-income population so that they're no longer excluded from financial services. And we could take a lesson, or rather take some lessons from some other sub-Saharan African countries like Kenya and like even Ghana and Ghana as well, who have developed alternative banking platforms such as mobile money operation, to reach a large segment of the population. In Kenya today, M-Pesa, they have access to the population as much as traditional banks, and this is the way to go in Nigeria as well.
Again, hasn't the banks done enough? In terms of, I remember the days of you need 200,000 to open 100,000, 150,000 naira to open an account in a bank, and we even tell you to take your money away to the next bank because we are a blue-collar bank here. We don't want your money. But now they say, look, without even a dime, you can just open the account and we can just do that. Isn't that enough to expand what you call the deposit base, the financial access base? Maybe I should be asking Joshua this question when it comes into this, but go ahead.
It is not enough, because banking is about financial intermediation. It's about, mobilizing deposits from people and taking it to, grant loans to other people. But if you look at the level of credit to the private sector as a percentage of GDP, it is quite low in Nigeria. It is less than 30%, 20% in fact, in full year 2016. If you compare that to South Africa has over 140% of credit to private sector as a percent of GDP. In Sub-Saharan Africa, the ratio is 75%. So banks are doing, they're doing decently well, but we have barely scratched the surface in terms of full financial intermediation. And probably the reason why we have this level of low level of credit to private sector of GDP is because our collateral laws still need to be revised. Until recently, when we passed the movable asset collateral bill by the presidency, if you have movable assets, right, you cannot use it to obtain a loan from banks. And for most of the SMEs in Nigeria, Nigeria has a very large informal sector. Most are SMEs. They do not have, they do not have fixed assets to obtain loans from financial institutions. So, in terms of getting to the SMEs, getting to the low-income population, we need to start looking at ways, to relax some of the collateral laws, ways to also reduce the tight monetary policy environments as well, so that we can, have more SMEs being able to access loans at affordable rates, and also look at ways to reach the depositors in the rural areas by leveraging of technology, such as mobile money operation.
The sentiment and the psychology here in Nigeria, and I want a yes or no if you share, that Nigerian banks are considered as a cheerful taker, but a reluctant giver.
Well, that wouldn't be so far-fetched.
But that's what the credit to private sector looks to show. Because folks want to deposit money, and you take it very quickly and easy. But again, they'll come back the next day or the next hour, and they say, may I have a loan, a bit of a credit? And you say, well, I get this about a sheaf of papers to fill, and then all the other things that go with it. So you think that's a problem?
It is a problem, but I would say the problem goes two ways. Number one, we need to look at the level of money supply to GDP, because what banks lend out is the deposit they gather from the depositors based in the country. And what they put deposits in the country depends on the money supply in the economy as well. Because we have a very tight monetary policy environment, the level of money supply in the economy is very low. M2 as a ratio of GDP is less than 25%. So that means that the money even available for banks to lend is quite constrained. So I guess where we have to start fixing the problem has to be from the monetary policy framework itself. Why do we have such a tight monetary policy regime in Nigeria? Do we need to start giving up controls on some of the FX management that we have in the country, so that the central bank could be able to, lower interest rates and improve the level of money supply in the economy? So those are the questions for the monetary policy authorities to ask. And then for the regulators as well, they need to start looking at ways to ensure that financial access reaches the people in the rural areas, low-income population, SME business owners as well.
In other words, but let's go, where do we take the second quarter GDP moving forward for financial assets, whether it's stocks, bonds, or treasuries?
We expect to see sustained growth. If you look at the PMI results that also came out earlier this week, I suppose, that's the August PMI data, you will see that both non-manufacturing, which is services essentially, and manufacturing PMI, improved. They expanded, in the month of August. So that shows that sentiment is still positive in both sectors, and we should expect growth to continue in the short to medium term. At least if we continue to see the central bank, maintaining the current FX policy, of flexible exchange rate regime.
Okay, Omotola, we'll get a few people who are interested in the banking story. Dr. Adewoyin Koka, who is on Twitter, says, to really capture the unbanked, we have to do something about unemployment, underemployment, and capacity development. Definitely,
because the first problem of low financial access, the first challenge of low financial access is the fact that we have low-income population. And for you to improve the number of people who are living above the poverty line, you need to also improve employment rates in the economy.
Very interesting. Thank you.
My pleasure.
Have a great day for taking the GDP to Broad Street for us.
Thank you.
Omotola Abimbola, investment analyst at Afrinvest.